It's more so that Bitcoin is kind of the new hurdle rate for investments. And then Bitcoin per share is kind of like the most efficient way to do that today, given the current, financial landscape that exists. The fact that they didn't get it and they had bad arguments against it only made me more bullish and made me realize, like, wait a second, like this is a real innovation. Bitcoin Treasury companies out there really just creating a product, issuing securities that meet that market demand of people that want Bitcoin powered exposure, but they can't buy Bitcoin directly. It has no dilution risk because you set the rule. When you download the Bitcoin software and you run Bitcoin Core, you're enforcing the rule that effectively says there will never be more than 21 million Bitcoin. And it would be reasonable for Bitcoin treasury companies to potentially outperform Bitcoin if they are using that quote unquote intelligent leverage, and Bitcoin does well. Part of what gave me the conviction in Bitcoin to begin with, it's like if everyone agreed with me and saw Bitcoin as like a consensus long-term bet, I would be less excited about it. Bitcoin itself like really belongs in your portfolio, and I think that's going to be more obvious over time. Just when people get some exposure and they see the number going up, they're going to be more inclined to like learn more about it and really take a serious position after that.
Before we get started with all the topics, and there's a lot of interesting stuff. I just told you before, you're one of the guests where it's like really hard to like pick one topic with just so many. Give the viewers and the listeners some background. Maybe they haven't seen your videos. Maybe they haven't seen the first episode that we did. A background of like who you are and why you're excited about Bitcoin.
Yeah, absolutely. I can start with my original Bitcoin journey, I guess. I first remember learning about Bitcoin in 2017, that bull run where Bitcoin started the year around $1,000 per coin and then ultimately ran up to $20,000 per coin. And I kind of had the perspective of being a value investor. And back then I was in college and learning about investing and learning about computer science and things like that. And I was really a value investor, whereas like I had kind of learned to buy things like IBM or Coca-Cola, like blue chip US stocks that go up 3% per year, pay a 2 to 3% dividend. And like, that's the optimal way to save for the future. And then seeing Bitcoin go from $1,000 to $20,000 in 1 year, I was like, what is this thing? This thing is a bubble. It's a Ponzi scheme. It's something that I, definitely did not understand remotely at all back then, but it kind of fascinated me because I was interested in investing. I was interested in money. I was interested in technology because I was studying information systems and computer science in undergrad. And I had kind of a libertarian-like background, or at least very like pro-freedom. And so like the idea of a form of money that's outside the hands of government and banks was like naturally kind of appealing to me. And so Bitcoin kept going up. I decided to buy a little bit in college. And then all throughout that 2018 bear market, I just dove deep into Bitcoin, kept studying it, DMing people like Pierre Rochard, which was like one of the pioneers of, I would say, like Bitcoin content and Bitcoin research. And learned a lot from him and many others. And as the price of Bitcoin fell from $20,000 back down to $3,000, I just could not see why it was going to fail, or the arguments that 99% of the people in the world had saying that it was a bubble or a Ponzi or scam or whatnot. They didn't really resonate with me 100%. Like I thought it could fall, like, it can go through massive bull markets and massive bear markets. But I thought over the long run, it seems like it's probably going to keep outperforming just like it had been outperforming for the last 8 years or so. And so that bear market, I just dove deep into Bitcoin, rode it all the way down to 3,000, kept buying and buying as much as I could. And then, the next bull market came about over the next few years. But eventually Bitcoin went back to, went to like $70,000 in 2021, and graduated college. When I first graduated college, I thought I should probably get a real job first before working in Bitcoin. So I did technology consulting at EY for a little bit, and then quickly realized that, my passion is working in the Bitcoin space. So I joined a company called Blockware Solutions, worked there for 2 years. Then I worked for Unchained, which is a a way to hold Bitcoin securely, effectively for individuals and enterprises. Worked there for 2 years. And then maybe a month ago or so at this point, I joined Similar Scientific, which is one of the largest Bitcoin treasury companies in the world. So that's kind of my high level Bitcoin journey.
That's amazing. And you said that with like you did not resonate with how the people looked at Bitcoin and how they kind of made very easy excuses why not to buy. And I think that's, and sometimes we Bitcoiners are frustrated at that, but honestly, that's why we have such an asymmetric bet possibility, because so many people actually don't understand it, even though it's so clear once you dig deep. At the one hand, you really like that because you like to have like this 10x, 100x possibilities, but at the same time, it sometimes is frustrating if people don't understand that.
Absolutely. Yeah, it is frustrating, but I've said this a couple of times on other podcasts, but like, it's part of what gave me the conviction in Bitcoin to begin with. It's like, if everyone agreed with me and saw Bitcoin as like a consensus long-term bet, I would be less excited about it. But part of the reason why I made like a Twitter account to begin with, and specifically like a Bitcoin focused Twitter account, was because I wanted to kind of articulate the Bitcoin thesis in my own head in as simple words and terms as possible, present that to the world, and kind of get feedback from people that thought Bitcoin was a stupid, horrible, terrible idea. And that's kind of why I would create threads on Twitter back in like 2018 and try to explain what Bitcoin is. And, I would see the counter arguments that smart people would make against it. And I would be like, you know what, I don't think you've done the research on this. Like, I think that if you had spent hours looking into Bitcoin and monetary history and so on and so forth, you would come to the conclusion that, wait, Bitcoin might actually be a better form of money. And everyone that's kind of against it, which everyone kind of starts against it because it's new and unknown, and people are scared of the new and unknown. But the fact that they didn't get it and they had bad arguments against it only made me more bullish and made me realize, like, wait a second, like, this is a real innovation. And it's pretty much as simple as most people don't know what it is and why it's important. And that's kind of exactly what you said. Like, that's the asymmetry with the Bitcoin bet at this point.
Yeah, if everyone gets it, it might be too late.
Yeah.
And then it's like, oh yeah, like if grandma says put your money into Bitcoin, yeah, it might be too late. And you said that you also now with Similar Scientific. I'm curious on two things, like why the shift to Similar, and also like what kind of responsibilities and what are you kind of doing there?
Yeah, absolutely. Yeah, for me, leaving, when I look back at Unchained, I think Unchained is one of the best Bitcoin companies in the world. They have a very true core Bitcoin ethos that they are trying to maintain, like the idea of using Bitcoin as a sovereign asset that you hold the keys to, and you can hold it without counterparty risk, but doing so in a safe, secure manner. So you don't just have like one key controlling a lot of Bitcoin stuck at your house, which may not be the best idea if it's a lot of Bitcoin. And so like Unchained as it's just a great Bitcoin company overall. So leaving Unchained was like a very sad and very tough decision for me. However, Similar Scientific it seems like such a great opportunity that I was like, okay, I have to take this role, because I see like what's happening in traditional financial markets, and like Michael Seyr had this slide recently where he showed that like 97% of institutional capital can't buy Bitcoin directly. They have to buy equity and credit. And I think of Bitcoin treasury companies out there really just creating a product, issuing securities that meet that market demand of people that want Bitcoin powered exposure, but they can't buy Bitcoin directly. And so I think that's one of the core reasons why Bitcoin treasury companies are taking off the way they have over the last 12 months is because institutional capital is starting to want Bitcoin. It's very early, but they're starting to want Bitcoin. And one of the easiest ways, or one of the only ways that they can get exposure to Bitcoin, is via Bitcoin treasury companies like Similar Scientific. So yeah, my role at Similar Scientific is director of Bitcoin strategy, which basically just means I'm trying to figure out how we can buy as much Bitcoin as we possibly can and increase our BTC yield over time, which means increasing Bitcoin per share over time, whether that's through equity, through convertible debt, through preferreds, through operating cash flow from our healthcare business, or other potential means that we might pursue in the future. That's kind of a lot of my day-to-day work. Also, like, we put out the Bitcoin announcements, so like working on the 8K SEC filing, figuring out like who our custody partner should be, how we're going to buy the Bitcoin, like, should we be buying it if we have a $10 million wire to our custodian, our trading partner, like, should we buy it over 5 minutes? Should we buy it over six hours? Thinking about how we actually want to acquire the Bitcoin and with the lowest amount of fees and getting the best price effectively. So that's kind of a few things that I've been working on. And then on top of that, just continuing to educate the Bitcoin community and the world on like why Bitcoin is important to begin with. I think like, speaking with Eric, before I joined, he was very supportive of me, continuing to make videos, continuing to go on external podcasts like yours, continuing to host my own Bitcoin podcast. And so I think that that's good for Similar. And I also think it's good for Bitcoin and good for the world, is because I think, Bitcoin works today. It doesn't have to really change much for it to be a $20 trillion asset or even maybe a $200 trillion asset. It's really just helping the world understand the information asymmetry that we've kind of just talked about, and helping more people grasp why Bitcoin is important and why they should have it in our portfolio. So it's kind of a combination of, core Bitcoin strategy at Similar Scientific, and then also just furthering, Bitcoin education and Bitcoin adoption, and helping people understand like what we're doing at Similar Scientific, and communicating to, the world and our investors, like what our strategy is, why it's important, and why anyone should really care about Bitcoin and Similar to begin with.
I want to just mark that down. I hope I don't forget it, because I really want to talk with you also about personal branding and the role that companies see now with future employees having actually videos online, actually explaining things, content, being independent authors, and kind of what those things really have advantages for companies to have them. But first I want to stick, because it's super interesting for me, but like most people might not find it that interesting, especially when you listen to Bitcoin podcast. One thing that I'm super interested in is also this Bitcoin per share. I started out as a stock investor, and there was always one thing that was super important, the earnings per share. That was like the one thing of like people were obsessed with, like that one metric. Of course, there's like a lot of other things that you have to look for if you invest in a publicly traded company, but earnings per share was always like the main thing. Is Bitcoin per share maybe like a future thing where if we live in a Bitcoin world, or we're coming closer to that, or maybe even in the transition already, where Bitcoin per share is the one true kind of metric where you can measure a company's growth and a company's kind of like how well they're doing?
Yeah, it's a really good question. I mean, you think about, whenever all of these companies have been doing their Bitcoin announcements, whether that's Strategy or Similar Scientific, the main things are we acquired, 200 Bitcoin, and we generated a BTC yield of 30%, which is basically the change in Bitcoin per share over a certain period of time. And then now we hold, 5,000 Bitcoin or whatever it is for each individual company. So it's one of like the key metrics that is talked about every time one of these companies does make an announcement. And the way I've thought about it, at least currently, because I definitely think it will evolve over time as to how we think about it. But the way I currently think about it is like, as an investor, I hold Bitcoin on, my personal balance sheet, spot Bitcoin with, no trusted counterparty. If I invest my money into something else, I typically would want it to outperform Bitcoin. I want, the company itself to be able to accumulate more Bitcoin over time. Otherwise, why would I invest my money, my Bitcoin, if I should just hold Bitcoin? I don't want to turn one Bitcoin into 0.9 Bitcoin, just like I wouldn't want to turn $1 into 90 cents. If Bitcoin is the better money, then Bitcoin is kind of the hurdle rate for investing capital. And so I think like right now, the clear arbitrage kind of opportunity is like all the companies in the world right now are so focused on generating like actual profits and actual cash flow, which is great. And like that's critically important, and that's going to exist forever. But we live in a world where like our money is broken, and so those assets are like, whether it's real estate, stocks, fixed income, things that generate cash flow, have been bid up to levels that are ridiculously high. And so, people will make the argument, okay, well, now there's an embedded monetary premium in each of those asset classes because they've been bid up way too high. And so the cash flows that those are generating are kind of overvalued. And a lot of that excess monetary premium is getting sucked into Bitcoin. And that's why Bitcoin is, and during this monetization phase, outperforming basically everything else. And so Bitcoin treasury companies are saying like, okay, we want to accumulate more Bitcoin per share, and we kind of want to use the existing financial system to do so. And so that could be as simple as issuing common equity at a premium to the Bitcoin on the balance sheet, buying Bitcoin with that equity that they issued, and then the Bitcoin per share increases. So now each shareholder or each share has more Bitcoin, increase in Bitcoin per share. And that's what Seyr has called and other companies call BTC yield. And I think that's, super important. The other way that Bitcoin treasury companies, generate BTC yield is by issuing intelligent leverage, right? Borrowing money via either convertible notes historically or preferred equity. Strategy has obviously pioneered the way there. And so it's like right now, Bitcoin per share is a fairly interesting metric, and it probably will be so for a very long time if I had to guess. And BTC yield would be a pretty interesting metric. When Bitcoin is just like, if we're going to get like really futuristic, when Bitcoin is just money, if that ever happens, which I think it has a good chance, and everything's just denominated in Bitcoin, maybe Bitcoin per share may not be as important, or still be important. You don't want to lose Bitcoin per share, but maybe they'll be paid out in dividends. Like there might be a Bitcoin dividend or something like that in the future. And so overall, like I think it's more so that Bitcoin is kind of the new hurdle rate for investments. And then Bitcoin per share is kind of like the most efficient way to do that today, given the current, financial landscape that exists. Maybe that'll change at some point in the future when Bitcoin's like, $10 trillion or, $10 million per coin. But for right now, it's like increasing Bitcoin per share seems to be like the name of the game if you have a very long time horizon and are willing to, take on a little bit of investment risk in addition to just holding spot Bitcoin.
And you mentioned that before, that 97%, I think it was, where Seyr talked about this capital still being locked and not being accessed by capital that could buy spot Bitcoin or directly Bitcoin. So they kind of have to buy products like an option trading, like they have to buy Bitcoin treasury companies or any credit things. And is that the main reason why the treasury companies are doing so good now? Because there's a lot of capital that kind of wants to flow into Bitcoin, but they cannot do it directly, so they have to find products like that?
I think that's one of the key reasons. Absolutely. The second key reason that I kind of brought up, but I didn't go into too much detail, is the idea of intelligent leverage, which Michael Seyr has kind of framed as creating different flavors of Bitcoin. And so for instance, if a Bitcoin treasury company targets, a 20% debt position as part of their enterprise value, they're kind of, and the rest of their enterprise value is mostly Bitcoin, they're kind of indirectly creating a leveraged Bitcoin position, right? Like they're borrowing dollars and they're buying Bitcoin in a way that's basically the same as saying they're shorting dollars and they're buying Bitcoin. And they do so to do that to amplify the future returns of Bitcoin. So if Bitcoin goes up a lot, then the treasury stock, holding all things equal, should go up a lot and a little bit more. And if Bitcoin goes down a lot, well, treasury company stock should go down and a little bit more down. It amplifies the future returns of Bitcoin. And a lot of people in the Bitcoin community and people that are interested in Bitcoin, recognize that, well, the Bitcoin thesis is kind of like what I said, we monetized all these other assets. Bitcoin is kind of sucking that monetary premium out. And it's reasonable, over the last 15, 16 years, Bitcoin has outperformed all traditional asset classes. If you expect Bitcoin to outperform traditional asset classes going forward, then maybe, and specifically fixed income, because these companies are, again, issuing fixed income and borrowing Bitcoin, like shorting the dollar and borrowing Bitcoin, then it would be reasonable for Bitcoin treasury companies to potentially outperform Bitcoin if they are using that quote unquote intelligent leverage, and Bitcoin does well. And so I think that appeals to a certain segment of investors that kind of want to amplify the future returns of Bitcoin. And then the credit products that, they issue, that creates another like flavor of Bitcoin that might appeal to someone. For example, like Strategy just created STRC, which is effectively like a dollar alternative. It's similar to like a money market fund or a high yield savings account, except it's massively over collateralized by Bitcoin. It pays a higher interest rate than your traditional savings account or money market fund. And so it has, a higher return with relatively low risk, as Michael Seyr would say. And that is appealing to certain people, right? Like, I think it's going to be starting off to be paying like 10% interest, which is like pretty appealing for something that he plans to peg at a roughly, the same price over time. And so it's really just creating these like new products that the market wants, powered by Bitcoin under the hood. And, the fixed income products kind of, trim the volatility of Bitcoin and provide a higher fixed income return. And then on the other side of that, you have the leveraged equity of these treasury companies that takes more. They want more of the volatility and more of the return, and they're happy with that as well, as long as Bitcoin keeps going up, because they think Bitcoin will keep going up. So yeah, I think that's like the other side of things. It's not just institutional capital can't buy Bitcoin. That's a key role, but it's also just people want leveraged Bitcoin exposure, and then some people want fixed income products that might have better risk adjusted returns than all of the other $300 trillion worth of fixed income products that exist today.
There's this, and I'm searching it since a long time. Maybe you found it somewhere. There's this great picture of Jesse Meyer's graph, and then there's all those little bumps towards the Bitcoin, and describe what product of Strategy is kind of pumping on what market. And I saw it once on my feed, and I cannot find it anymore. But it shows really nicely that those products are basically making tunnels, making pumps, making pipes towards Bitcoin in different ways. And this is a really interesting point, because sometimes like treasury companies get a lot of heat from the Bitcoin community, like, oh, it's not real Bitcoin and all those things. Like, yeah, like, of course, like I personally only hold Bitcoin, but I still can like the idea of treasury companies, because I see the bigger picture, and it's a normal kind of evolution towards the Bitcoin financialization. Like, of course, companies will get in, the equity market will get in, the bond market will get in, like real estate, all those things will naturally happen. What is for you the most exciting kind of bucket that those products can actually tackle? I know you have recently made a video on like the fixed income market, and it's like huge, like 300 trillion or something like that, which is like 150x bigger than Bitcoin right now, something like that. Is that the main one you're excited about right now?
Yeah, I would say that's broadly the main one that I'm excited about. If you include like fiat money in that as well, or combine those two, I think that's very interesting. The reason why is like fixed income, really all it is like it's future dollars. And so it's a promise for future dollars. Like you have an income stream of dollars or another fiat currency in the future. And same with money. Like you have money in your checking account. It's basically you have dollars, and they're promised to earn interest over time. And I think that like it kind of goes back to the whole idea of a speculative attack. I think originally termed by Paul Krugman, and then Pierre Rochard made it popular in the Bitcoin space, where basically the issuance of new dollar denominated debt, or even like more specifically something like STRC, where it's like pretty close to a dollar alternative, right? Like in Seyr's slides, he's basically saying like, this is, it's not the same as a high yield savings account. Obviously it's not FDIC insured and, other potential risk, but it's pretty close to being, a dollar alternative, especially because his intention is to keep the price pegged. And so it's, you can make a very clear realization that as Seyr issues more STRC securities, in a way, he's creating dollar IOUs out of thin air, and then raising capital from bank accounts and whatnot from issuing those securities, and then buying Bitcoin with that. And effectively, he's creating new dollar IOUs out of thin air, weakening the dollar, strengthening the Bitcoin because he's buying Bitcoin. And the whole concept of a speculative attack is it kind of can feed on itself, where it's like, okay, well, you weaken the dollar and strengthen Bitcoin. Well, now all of a sudden after that transaction, your balance sheet is stronger. If you already hold a lot of Bitcoin, the dollar is weaker. You can then do it again and again and again, and eventually, the weaker money gets kind of driven out. People don't want it anymore, and the stronger money, gets kind of stronger and stronger over time, and eventually the best money wins. And so it's like STRC is like pretty interesting example to see like how fast could this really accelerate, and like it is the idea of a speculative attack effectively, which is quite fascinating because it's a positive feedback loop, and it's a pretty clear positive feedback loop. And when it gets going, and if Seyr is aggressive with it, and especially if other Bitcoin treasury companies kind of start copying the strategy, then all of a sudden you might have many different entities around the world actively borrowing dollars, buying more Bitcoin. And if it feeds on itself in a very positive, aggressive way, it could get out of, it could be really good for the price of Bitcoin effectively. So I think that's like the most interesting one, especially because like we talked about, fixed income and money itself is like a 300, maybe $400 trillion asset class if you combine both of them. And that's a huge asset class. And it's going to grow as Seyr and other Bitcoin treasury companies create more fixed income products that now exist in addition to all the other fixed income products. And if it keeps growing, like they're going to be funneling that capital into Bitcoin, and it's a huge market to obviously tap into. And their strategy is just obviously scratching the surface of it. It's very, very early in what could be attracted from that asset class.
So effectively, if there's those feedback loops at one company that get a stronger balance sheet because they are strengthening the Bitcoin and weakening the dollar, and another company does that, is that at some point just leading to a complete implosion of the US dollar? Like if more and more it gets popular and we're just now seeing the start of that?
Potentially, right? Like Pierre or someone else would argue, well, it's a profitable endeavor to borrow dollars and buy Bitcoin because interest rates are artificially low. And so the way to fix that would be to raise interest rates and jack up the real cost of capital so that it's unprofitable to do something like that. And that, I agree, like that would kind of be the end game. But if they try to do something like that, well, then the federal government, which is so indebted, becomes even more insolvent. Companies that have borrowed dollars to invest in other things, they're going to start struggling if they have to refinance or if they borrowed money at a variable rate. And so it kind of becomes a weird thing. Like our economy, our debt-based monetary system is very fragile. And so we've had to consistently lower the cost of capital so we can have zombie firms continue to work and big government continue to work. And it seems like that's all kind of coming potentially to an end if the world is actively monetizing Bitcoin. Now, like there's no guarantee that this is going to be a straight shot and Bitcoin is just going to go to $100 million per coin in the next few years. Obviously, it can go through cycles to where if the market gets worried and the market's like, actually, like this leverage is bad, like there can be a debt contraction in the economy and in the Bitcoin market where it's like, okay, if one person defaults and another person defaults, and it can kind of feed on itself the other way too. And so it's like, that's just kind of like the nature of a debt-based monetary system. It can expand rapidly, it can contract rapidly, and then the Fed and the government are kind of supposed to keep it on track to some extent, but it's very difficult to centrally plan that over time. So yes, it could lead to like dollar debasement in a rapid way. But, if there's a black swan event or there's for whatever reason, people happen to get bearish or worried and they start to temporarily demand dollars again, there could be some sort of like debt contraction event in the short term. But obviously in the long term, any sort of like debt contraction, event where there's high demand for dollars ultimately just leads to the Fed lowering interest rates again, the federal government, creating more T-bills, spending more money into the system and trying to prop it all back up, over and over again, like they've done in the past. And so, yes, it could lead to a weaker dollar, but it could also, there's no guarantee as to like how fast that this could occur.
That's interesting. Is then that's the kind of the thing of like, this is how the US dollar can implode. But then you mentioned it, and the next would have actually been my next question: what dangers are there to Bitcoin Treasury companies? So you see if there's like 1-2 companies that kind of go bankrupt or default or do over leveraging or like are not responsible enough with the strategies, and then it kind of cascades up from there, and all of a sudden we have a sequence of bankruptcies in the Bitcoin Treasury companies. Is that something? I mean, there's like big companies, they have controls, they have a lot of like a lot of tax guys, a lot of lawyers, and all those things. Is that even something that you are worried about, that it might happen because there's a lot of controls and stuff in place for that?
Yeah, it's a really good question. And it's kind of related to this whole topic of like Bitcoin is a pretty contrarian trade. It's been like that way for the last 16 years. Bitcoin Treasury companies, to me, seem to be the contrarian trade within the contrarian trade, which is kind of funny. It's like hardcore Bitcoiners kind of hate it. And then also the traditional financial system looks at it and like, this is insane. There are obviously risks with Bitcoin Treasury companies. Like one, as you pointed out, it's like Bitcoin is a bearer asset that you can hold without counterparty risk. If you hold shares of a Bitcoin Treasury company, you obviously don't hold the Bitcoin directly. And there are cons to that, obviously. You don't have sovereign control of the bearer asset. On top of that, there's leverage risk, right? Bitcoin Treasury companies borrow money and buy more Bitcoin. And so it's like, what does leverage do? Well, it amplifies future returns, which future returns, while we think the price of Bitcoin could go up, will go up over time. It could also go down, especially over the short term. Certain points it will go down in the short term. And so leverage amplifies future returns up and down. So that's obviously another risk. And so it's like, when you look at, or I guess to take a big picture perspective on Bitcoin Treasury companies, they are relatively under leveraged compared to like a lot of other asset classes right now. Like everyone kind of has been focusing on, oh my gosh, these companies are borrowing money and buying Bitcoin. Like that is insane. How is this even possible? But when you compare it to other asset classes, like real estate, for example, like it's common or completely normal to borrow 80% of your house value and put 20% down. And like, you're effectively going like 5x long real estate when you do that. Bitcoin Treasury companies are kind of doing the opposite of that. Like most of them are doing less than 20% debt and 80% equity. Like that's kind of like a rough target for many of these companies. And so it's kind of the opposite of real estate, where instead of, putting the 20% down and borrowing 80% of the dollars, you put 80% down and you borrow 20% of the dollars. And so you're not 5x long Bitcoin with Bitcoin Treasury companies. You're more like 1.2x long Bitcoin with Bitcoin Treasury companies. And so it's a fairly under leveraged market currently. Could it get more leveraged? Like, could other Bitcoin Treasury companies come out and start borrowing money at 25% interest rates and have their leverage ratio significantly higher than other companies? Sure. And then obviously that could be a major problem for them if the price of Bitcoin falls, a significant amount. But right now it's like the leverage ratio for a lot of these companies is so small that they're operating in a fairly conservative, quote unquote, intelligent manner, as Michael Seyr says. And so, yes, there's risk. There's, the leverage risk and the custody risk and the counterparty risk that I pointed out. But they're also just manageable risks. Like it's not like absurd blind risk that's being taken from what I've seen so far by many Bitcoin Treasury companies.
The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are really representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The thing that I kind of like that I could imagine happening is the first, like with any trade, the first one that is doing like the borrowing against something or like doing some loan things, and then all of a sudden you have it and you tell kind of your friends about it, and then they do it and they are later to the game, so they get more greedy. So one thing I was thinking about, like, what if there's like companies next year coming in and saying like, oh shit, like we should have done it like 2 years ago. We have to get more aggressive now. There's like, they're doing it so conservatively. We can do it a little bit more aggressive. And this could be like a thing like that. But honestly, right now, as you pointed out, you don't see any concerns, and I also don't see any. It's more like, okay, what happens in like 1-2 years from now if smaller companies come in and do this on a larger scale? It's also not that many companies. If we're honest, there's how many Bitcoin Treasury companies are there? Like it's nothing against all the companies that don't do that.
Yeah. And it's actually kind of funny, like the larger Bitcoin like strategy and similar, like they've taken on leverage, but like the smaller long tail list of Bitcoin Treasury companies, they're not even really playing the leverage game. Really, they're just issuing equity and buying more Bitcoin. So like the leverage in the Bitcoin Treasury market is probably like a lot smaller than most people think today. But yeah, absolutely, you're absolutely right. Like a year from now, if Bitcoin's at $500,000 per coin and every company is like, I need a Bitcoin Treasury strategy, and I'm willing to borrow money on short duration debt at really high interest rates just so I can hold a little bit more Bitcoin. And then if Bitcoin falls 50%, like then they could be in serious trouble. And so, yeah, maybe that'll happen. Hopefully it won't happen, but it's possible that'll happen.
Also, one thing that I'm curious on how you think about that is how different Bitcoin already right now is, where we have, let's say 6 years ago, it was mostly retail driven. There was not a lot of like institutional buyers. It was strategy or MicroStrategy back then. Of course, there were companies involved, but like not publicly and not a lot and not big ones. And now we have this, we have now bigger companies. We see now that retail is kind of not really here. We see it in the excitement, in the lack of excitement. We see it in the Google trends, YouTube search trends, and all the retail driven trends that we can see. At the same time, we are, I think, like 80% or 70% higher than the last 12 months. It's kind of funny. I got yesterday a comment like, "Oh, when it's also bullish, why is the price not going up?" I'm like, yeah, like we did 75% the last 12 months. That's pretty good. I feel like. How's your thoughts? What's your thoughts on the Bitcoin being different now? I think George Bodine describes it from being a small boat to now being an aircraft carrier and being like just not that rockable anymore in the waters.
Yeah, it's a good question. I mean, as far as like retail coming in, it definitely does feel different this cycle in the sense, like you said, 2021, 2017 were almost entirely driven by retail, it seems like, looking back. Whereas this cycle, it hasn't really been driven by retail. I think part of it may be the fact that there are new speculative vehicles that are sucking up retail capital. Like in a way, I think Bitcoin treasury companies, which again are like leveraged Bitcoin positions, are kind of attracting retail. It's like retail wants the more volatile, shiny new toy that could amplify the future returns of Bitcoin in a significant way. And like in a way, that's what Bitcoin treasuries are. And they've kind of grabbed the attention of retail and made it easier for them to access Bitcoin. Maybe they already had a brokerage account or a Robinhood account or whatever else. And they happen to say like, oh yeah, I want to buy this stock that's trading at, not $120,000 per coin, but it's at, $20 per share or whatever the treasury company might be. Like they might find that more attractive. The other, I think, like source of maybe demand for Bitcoin treasury or for Bitcoin really at this point is like, and I would still kind of incorporate retail into this, but like people that are just passively saving in their 401k or an S&P 500 index fund or a Vanguard total stock market index fund, like those funds are starting in the early stages, starting to be infiltrated with companies that hold Bitcoin on their balance sheet or like hardcore Bitcoin treasury companies themselves that are like really dedicated to accumulating Bitcoin. And that's starting to like get infused into everyone's portfolio, but whether they're really paying attention to it or not. Like Michael Seyr recently noticed, or someone noticed this, and Seyr thought it was funny how Vanguard was, I believe, the largest holder of strategy MSTR at this point. When that's kind of ironic because Vanguard, I believe, they prevent their clients from buying Bitcoin or buying strategy directly on their platform, but the entire like thesis behind the history of Vanguard is like, we don't know how to pick stocks. It's very difficult. Really, you should just be matching the market and doing whatever the market says, maybe on a market cap weighted basis. And that strategy, because Bitcoin has done so well and strategy has done so well, leads their funds to just naturally buy strategy by definition and, following their own strategy. And it's funny how they happen to become the largest shareholder of strategy because of their own strategy, despite them saying don't buy strategy. So
strategy might be confusing here.
Yeah, exactly. So like, I think those are like two sources of demand, like retail buying Bitcoin treasury companies as speculative, and eventually that money or that capital does flow into Bitcoin because Bitcoin treasury companies create securities and buy Bitcoin. And then also just the passive savers or the financial advisors that help clients build quote unquote diversified portfolios. Like Bitcoin's getting to the size and Bitcoin treasury companies are getting to the size that those companies naturally are getting incorporated into the passive index funds and diversified portfolios. And that's giving the world an allocation to Bitcoin. And if Bitcoin is a number go up technology and it keeps going up, and specifically if it outperforms other asset classes, then, those portfolios will allocate more and more to Bitcoin treasury companies and Bitcoin over time effectively. And then that's kind of how maybe the next wave of capital like keeps flowing into Bitcoin. It's just kind of passive funds and diversified portfolios and retail investors buying, Bitcoin treasury companies. And yeah, I think that's kind of what's been happening, and maybe that'll keep happening for, the next decade.
Yeah, there's definitely a big crowd that thinks that Bitcoin's CAGR with like 50, 60%, whatever it is boring. And in the past, they kind of wanted to go the altcoin, the shitcoin lane, and bought like whatever Inu coin. And now I actually see that Bitcoin treasury companies are stealing a lot of thunder of altcoins. The people that are now saying, "Oh, I don't care about self custody. I don't care about the freedom thing. I just want to have the fastest horse." Like, yeah, then maybe your money is better off in a treasury company or in some other aspect or some leverage play, or like whatever you want to do with that, rather than having Bitcoin and self-custody, because Bitcoin and self-custody for some people, it sounds crazy to me, but for some people it's already boring with like 50, 60 CAGR, which is kind of absurd to think about that. But you want to have the higher return, you want to have the 1,000%er in the future. I don't know what's happening there, but I do see that altcoins, the treasury companies, might steal a little thunder of altcoins because they are no longer the faster horse in the race. And it's positive overall because it's a Bitcoin ecosystem.
Yeah, I definitely think that treasury companies are stealing some of the attention away from altcoins. And I definitely think that's a good thing, because at least you're getting some Bitcoin exposure rather than buying complete absolute vaporware. The whole idea also of like self-custody Bitcoin and Bitcoin treasury companies, and how people are buying Bitcoin treasury companies before self-custodying Bitcoin, I don't necessarily see that as a bad thing. Like, I think back on the history of Bitcoin, and it's like when Bitcoin first existed, there were no exchanges. Like, you downloaded the Bitcoin software and you mined on your laptop. Like, that was the only way that you could get exposure to Bitcoin. And then an exchange got created, but it was really weird. Like, you had to go on maybe PayPal, or you had to go to like Western Union and wire money to some sketchy entity, and then hope that your money appeared, and then hopefully you could still log into the website and click buy, and then hopefully they'd send you the Bitcoin to like your actual wallet that you set up. And so it's like, I kind of see it as over time, it's getting easier and easier to just buy Bitcoin and say you have some sort of Bitcoin exposure. And then once you have some Bitcoin exposure, then you start paying attention to it. Then you start listening to a podcast about it. Then you read a book. Then you're like, actually, I'll try to buy a Trezor or a Cold Card or whatnot. Oh, like, this is cool. Like, I can hold this without any other third party having access to my wealth. Like, that's really interesting. And so like, I view almost like Bitcoin ETFs and even treasury companies as like top of funnel marketing for Bitcoin. And it's enabling more and more people and institutions to get exposure to Bitcoin. And then like over the long run, everyone will kind of realize like, Bitcoin treasury companies are great. Like, maybe it belongs in your portfolio, but also like Bitcoin itself like really belongs in your portfolio. And I think that's going to be incredibly obvious, more obvious over time. Just when people get some exposure and they see the number going up, they're going to be more inclined to like learn more about it and, really take a serious position after that.
Yeah, this is what I also hope. The same thing I actually said about altcoins like a few one cycle ago, where I feel like once they got into the gambling side with altcoins, they actually educate themselves into the whole crypto ecosystem, and then they realize, oh yeah, I should have made I made 100x now with my whatever coin, and then I should preserve that wealth in the best store of value asset there is in Bitcoin, and then I can store there, and I might gamble with some altcoins. It's a different story with Bitcoin treasury companies. I don't want to compare that, but I just see the comparisons with like how retail mindset goes, and the same way I could imagine that people that just go into treasury companies because maybe it's convenient, it's in their brokerage, and they're like, oh yeah, they are doing this Bitcoin thing, and I bought this thing with Seyr, and he's talking about Bitcoin. Maybe I should get, I don't know, a cold card. And it's like, oh, okay, I set it up. Oh, interesting. Top of funnel. I like that idea. And you then have some way. I say even though, because there are some people, I actually made those polls of like how many people in my community have Bitcoin in self-custody versus like not. And it's about 50-50 actually, which is astonishing because I make advertisement for self-custody every single episode. But still 50-50 don't have self-custody. And I always say, even if you don't have self-custody, even if you're fine with having in on a brokerage, on like an ETF, on wherever you have it, still look into it just for the curiosity of how it works. Even if you don't put your Bitcoin there, just like look at it, like maybe do a seed phrase and recover them, and like try a hardware wallet, like just try it out for the curiosity, because we are so early in this game. And I think it's important to educate yourself in the whole ecosystem. And yeah, I love the top of the funnel idea that you just mentioned.
Yeah. And I totally agree on experimenting with Bitcoin and figuring out like how it fundamentally works. Like, I think that was like a key breakthrough probably for me when I was initially learning about Bitcoin. It's like Bitcoin, you can download Bitcoin Core, which is like the Bitcoin software, which effectively enables you to enforce the rules of the network and download the entire blockchain and see all of the coins that exist, in the world, all of the Bitcoin. And then on top of that, you can generate a private key to your Bitcoin or to any Bitcoin. And you can then hold that private key, which directly controls the Bitcoin. And since you run a node that enforces the rules of the network, and since you hold the private key yourself, you literally have access to potentially billions of dollars worth of wealth that no government, no bank, or anyone can stop or censor or take from you. And it's like, it's literally, comparing it to gold is pretty interesting, because it's like, it's actually a physical bare asset that you can hold in your hand without counterparty risk. And you compare that to stocks, fixed income, real estate, like those are kind of all have counterparty risk. Like the stock, the management team has to keep performing. They have to keep generating profits, which is business is really hard. Fixed income, that means, you lent money to someone else. Like hopefully they'll pay you back at some point in the future. Hopefully they keep having cash flows to pay you back. Real estate, it's like, yes, you have a physical property, but you really hold like a deed to the property. And then you also have to pay property taxes on it every year. And if you don't pay property taxes, well, you actually don't own the property anymore. And then the property can break. It's, it's not necessarily very durable. Things go, get outdated. You need to update the property. You need to cut the grass. You need to do all of these things. Whereas like Bitcoin, it's like, okay, it's a physical bare asset that you can hold that's like really outside the existing system. And then on top of that, it has no dilution risk, because you set the rule. When you download the Bitcoin software and you run Bitcoin Core, you're enforcing the rule that effectively says there will never be more than 21 million Bitcoin. And you're the one that's saying like, that's the rule, and that's the rule that I'm going to go by. And everyone else kind of has to download the same software and say, what, that's the rule I'm going to go by too. And no one can change it because we're all running the rules locally on our computer. And so like when you really take a big picture perspective, it's like Bitcoin is like almost the only thing that you can really own, which is like completely mind blowing when you compare it to everything else. But in a way, it's kind of true. Like gold, yes, you can hold the physical asset, but you're still subject to dilution risk in the future. Like if someone discovers a new gold deposit at the bottom of the ocean and all of a sudden gold becomes 2x more plentiful, and they start selling a bunch of gold, well, like they're diluting your gold position. Obviously that happens with every other commodity, but it could happen to gold in the future. And it does happen to gold over time. The supply of gold may grow at like 2% per year, but it could happen at a faster rate in the future. And so it's like Bitcoin is just this like crazy asset where you literally, it's one of the only assets that you can actually own, which I know for sure, like, most people have not been able to grasp that, but it is pretty important.
Yeah, it's those basics where when two Bitcoiners talk to each other, they might be able to forget those basics, and it's super interesting. I don't know, are you ever on podcasts that have nothing to do with Bitcoin and you are the Bitcoiner that educates them on Bitcoin?
Like, am I a guest on a podcast like
Exactly. Yeah.
that?
Are you
Not
doing
really,
that?
honestly. Mainly only Bitcoin podcast.
I did that, I think, 2 times in the last like 8 months or something like that. It's a whole different experience. I
Hmm.
can really recommend that. It's
Yeah.
super fun to see the questions. It's a whole different, like the basic level of what questions come your way. It's like, oh shit, yeah, those questions I researched like 5 years ago.
Yeah. Yeah. I will have people that, they'll say they followed me on Twitter that were like friends, and they're like, dude, like, I follow you on Twitter, but I don't even know what you're saying half the time. And I'm like, what, like, which part, like, which word, like, do you not understand? And then like, you start talking to them exactly like you're saying, and they're like, oh wow, like, I need to start from the basics. Like, when you're thinking about this, as often as we're thinking about it, you kind of forget how, like, you've kind of already conceptually grasped so many different things and put them all together. And it's literally computer science, proof of work, economics. Like, it's piling all these different things that are very abstract and unique, and most people don't think about. And we already kind of like have that picture of what we're thinking about in our head, but most people have no idea what we're thinking about.
Before we come to the end routine of the podcast, I want to get into one more topic. And you have a newsletter, a Substack that I found actually today. And you have two things in there. And they both have the year 2035. The one is Q1 2035 with 10 million Bitcoin price. And then the other one is also interesting, probably like kind of relate to each other. The valuation reset, where you say over the next 10 years, stocks and real estate will crash and everyone will be better off, which I 100% agree that both things will happen and it will be positive. First of all, like what's your vision for 2035 and how kind of did you pick this like 10-year time frame?
Yeah, absolutely. So this is a quarterly letter that I started at the start of this year. You know, part of what I was trying to do with this quarterly letter is to think in contrarian ways that are also very long term. So, like, from my view on thinking about long term investing in markets in general, is I don't know how to time the next 3 to 6 months. I think that's almost nearly impossible because there's so many other variables. But I can think longer term, maybe 10 years, and I'm willing to wait that long, whereas most people are not willing to wait that long. And I can see, based on technology and how like civilization is evolving, and based on Bitcoin being a core tool that I think is going to change the way society really works, I can then kind of like look at what I think the future might be and allocate capital according to what I think the future will be 10 years from now, rather than what it's going to be in the next 3 to 6 months, because I can't do that. And so that's kind of what I was going at with the new quarterly letter, is just thinking about what the world's going to look like 10 years from now. And, I wrote the first one Q1, so Q1 2025 to Q1 2035. And then the second one I was Q2 2025 to Q2 2035. And yeah, the first one was just saying that, okay, Bitcoin could actually go to $10 million per coin over the next 10 years. Like, that's aggressive, comparing it to the power law model or even Saylor's model. But when you incorporate like AI and the fact that technology deflation might be occurring, and the fact that, people like Michael Saylor are issuing fixed income instruments that are kind of a speculative attacking the dollar, and, a monetary network kind of becomes more valuable the more users that join it. And so it can kind of go on these exponential, rapid, accelerations of adoption. And so just it kind of basically portrayed, the future of Bitcoin adoption as maybe this happens faster than people are expecting. And maybe Bitcoin does, get to $10 million per Bitcoin. And then the second one was focused more on like, okay, well, if Bitcoin does get monetized and it does suck the monetary premium out of all of those other asset classes, how does the world change? And one of the ways that I suggested that it might change is valuations on companies and real estate will like reset to more normal levels. A very easy to understand example today is, money's bad, so people hoard houses. That naturally drives up the prices of houses more than they should be. There's a monetary premium within houses that has like weird bad effects for society as a whole. Like, younger people now can't afford housing as much as they used to. And like you can very clearly see that in the data, like home price to median income ratio is just like off the charts, way far higher than it historically is. And that creates like weird incentives to where older people are storing a lot of wealth in houses and may have a lot more wealth than they otherwise would if houses were at a more normalized level. And then younger people have to spend a lot of their money on just like having a shelter and a place to live. And maybe that delays having a family. Maybe that forces them to get a job that's quote unquote safer, or it's not something that they want to necessarily do, or things along those lines. And it creates like weird incentives, I think, for the system. And, it kind of can explain things like, why is socialism on the rise? It's like, well, like if certain group of the population is hoarding all the real estate due to bad money, and then the younger population, can't afford anything really, can't afford to have kids, then it's like, okay, well, yeah, obviously they're probably going to vote for things that give them free housing or things of that nature. Whether that's right or wrong, who really knows? But it's like, if you just fix the money, then the people that hold all the houses can move their wealth from housing to, or a portion of their wealth from housing to Bitcoin. They'll get better returns because Bitcoin is a better form of long-term savings. And then all of a sudden, younger people at the same time would be able to afford, cheaper houses and actually be able to live and do other things with their lives. And so I think that's kind of what I was going for in the valuation reset, is housing can become more affordable. Businesses will trade at lower valuations, which will actually be a good thing. Capital will be allocated to like things that are very profitable and very productive, rather than speculative and unknown. And you're just, you can't hold dollars, so you chase anything at almost any valuation. I don't think that that's necessarily good for society either. And I think, the core problem is the money is broken. Bitcoin is a better form of money. And that's, exactly what's been happening over the last 16 years. We've, it is hyper Bitcoinization that seems like we're living through. And it seems like we're still in the early stages of that. And that's why Bitcoin could be $10 million per coin. And that's why the valuation of everything really just needs to reset over, after this monetization phase or during it.
How does inflation play into that? I'm asking because whenever we talk about future valuations, I often get the reply of saying, hey, that's great, the Bitcoin is at 1 million, 10 million, whatever. But what's the dollar worth at that time? Like maybe 1 million is the same as like 100K.
Yeah. I mean, when I was thinking about the possibility of Bitcoin being $10 million per coin in 2035, I'm saying that in real dollar terms today. Like, obviously the dollar is going to get debased over the long run. Bitcoin's going to be, $1 trillion per coin, and whatever hot dog is going to cost $1 billion, whatever. People will say stuff like that, right? I'm saying like the real purchasing power of Bitcoin could be actually $10 million per Bitcoin 10 years from now. Maybe it happens slower than that, of course, or maybe the thesis is wrong, but I think it's perhaps more likely than a lot of people are suggesting, or that, most people, when they hear something like that, they would be like, oh, there's no way, that's impossible, that's ridiculous. But maybe it's more likely than not. So yeah, I'm thinking of real terms rather than just nominal, highly inflationary terms.
Yeah, inflation is the one thing that probably will break all models to the upside. It's like, yeah, that's my only thing also that I have sometimes with the power law of like, yeah, but what if the dollar hyperinflates like 2032? Like that can happen. Like nobody knows that. I don't know that it will happen, but I also know that you don't know that it definitely will not happen. If that makes sense, I don't know. But this inflation could really just break everything to the upside.
That kind of reminds me of STRC, which is what we were talking about earlier with MicroStrategy's new preferred stock. Like, this is one of the ways that dollar inflation could get completely out of control. Like, for instance, I'm going to exaggerate just to make the point. If Seyr, if all the dollars in the world are worth roughly $100 trillion, like bank accounts, money market funds, T-bills, stuff like that, if Seyr just decides tomorrow and to issue like $100 trillion of STRC, which is like new dollars being created, and then uses that 100 trillion that he raised to buy more Bitcoin, and then people move all their dollars from their bank account into STRC because it pays a higher dividend and whatnot, then that could be like kind of the dollar hyperinflation. The money supply doubled overnight. Bitcoin obviously probably went to like $1 billion per coin overnight. And, that could be like the cascading factor of like, oh, the speculative attack is kind of really starting to take place. And because Bitcoin went to a crazy number, then Seyr can literally do it again and issue another $100 trillion, right? So it's eventually it probably will break to the upside just because a dollar is an imperfect form of money. And if someone can borrow against it, weakening the dollar and strengthen Bitcoin, they're probably going to be doing it. And it could turn into that positive feedback loop we talked about.
That's amazing. As a teaser right in the starting out, it's just like a personal interest of mine, personal branding, social media, and all those things. I want to get to in that just a little bit, with the total risk that I bore people now. But I see a big trend. And when I started coming up in like 15 years old, basically like 10 years ago, when I was 15, 16 years old, there was this thing where companies did not really want the employees to be on, and it was like a kind of a risk. You had like party pictures and all those things. So people said like, oh, maybe it's not good to have your own voice on social media. It can impact your job negatively. And I think we switched that kind of around. It depends on what you post, but if you post like good stuff, then it can enhance your job offers. It can enhance the position. It can enhance basically everything, because no longer you're just someone that works in the company, but you also then a spokesperson that has a voice and a community behind them for their company. And I just found it very interesting. Even in the Bitcoin community, you can clearly see that you have a lot of advantages, of course, if you just have also a voice in the community, if you also have a presence, a social presence, a proof of work, basically of written content, of spoken content, of like whatever content you're doing. And I just wanted to get your feel of it. Also, as someone that now from EY, Unchained, and now Scientific, and you have your own social presence and you have a personal brand outside of the company. How's your kind of experience with that, and what's kind of your take on that?
Yeah, absolutely. I mean, one that I think it shows, whether this is good or bad, how much time people spend now on computers and their phones, whether that's scrolling Twitter, Instagram, or TikTok, or whatever else it is. People literally spend hours and hours per day just consuming content from individuals that just go out there and create content, which, is kind of interesting. And it, shouldn't be too surprising that, okay, well, whoever's creating the content that people are spending on, more than they're watching TV, or more than they're playing video games, or whatever else that they might be doing, obviously those few people that are creating a lot of content, or whatever you want to call it, they're going to have like an exponential impact on the world and everything that whatever they're saying, if people are willing to listen to it. That's interesting. And then two, I think most people in the world, they are skeptical of like corporations and brands, and they actually want to hear more from like individual people. Like an individual person is a little bit more trustworthy than a company. And so I think that corporations are like starting to learn that and lean into that a little bit more, because they know that like, oh, if it's a corporation, it's like, who's really behind it? It's just kind of like this branded entity that's going to sell me something. Whereas an individual is kind of like a person that's going to maybe more likely speak their mind, or, is not, they may be associated with a corporation, but they're not like tied directly to the organization, and they're just a little bit more trustworthy. And corporations can kind of lean into that if they're smart and embrace like specific individuals. So yeah, I mean, it's crazy to think of how the world has changed over the years. Like podcasting in general is something that's, I never thought that I would be doing that like on a regular cadence, whether it's going on external podcasts or hosting my own podcast. But, in hindsight, it's one of the best things that I ever did. Like, you kind of build connections with really intelligent people that are interested in the same things that you're interested. You ask them a bunch of questions about them, about themselves and how they think about the world. And people love to talk about themselves and how they think about the world. And it's a great way to build connections with other people that are really smart. And so I think that's one of the most underrated things that more people should, consider doing. Starting your own Bitcoin podcast probably. But yeah, no, it's funny to see like how the world has changed, and how being an individual on social media, was maybe a negative in the past, but now may be more of a positive as long as you're saying the right things or writing the right things and creating the right videos.
I say that every single time, like you have to start, like, and podcasting might not be for everyone. So that someone might want to be anonymous, or might not want to be with camera. There's all different kind. Like there's a newsletter, there is just an audio podcast, there's video formats, there's short form videos. Like there's all, my main point is always like, create some content, and even if in the start, if you don't even post it, like just create content because it helps you think. I think that's a great way, and then all of a sudden, you can also make connections and all the other benefits from that. We have one question that I asked each and every one of my returning guests on the podcast, and the question is, what have you learned outside of Bitcoin since your last appearance?
That's a good question. What have I learned outside of Bitcoin? Let's see. One that I would say is, this is kind of a funny one, I guess, but I like kombucha. I don't know if you've ever had it before, but it's like a cool, like probiotic type drink. And I think it's good for your gut, and I like to drink it. So it's something that I've leaned into more over, the last 7 months or so. So that would be something that I've kind of learned about myself, maybe.
I think someone already told me this once. Kombucha,
oh, really?
Yeah. I just had to Google it, and I was like, it seems familiar. I think you're probably the second person that told me that. But I have never tasted it. Like I only heard it now either once or maybe a second time on the podcast. Is it just good for the stomach, or just like a good drink for all those things?
Pretty much. It's good for your gut. It's got probiotics. The different ones can taste good and some taste bad. It's not necessarily a taste thing. It has like a little bit of caffeine, so it like can kind of like keep your mind a little bit sharper. It's just like a great afternoon drink. Like I love drinking coffee in the morning, and I think I'm like 100 times more productive after I've had a little bit of coffee. And so like kombucha is like, if I need that extra energy in the afternoon after eating lunch or something like that, kombucha will like really turn me into, a machine on Excel or PowerPoint or whatever else I need to accomplish that afternoon.
I have to look into that. I might just, is it available in local stores, or do I have to buy it on the internet?
Yeah, it should be available.
I will drink one. I will tell you how I like it. Really cool. We have an end routine, as you know, on the podcast, where the previous guest is asking a question for the next guest, without knowing who the next guest actually is. And the previous guest asked you the question: at what point in your life did you ask yourself how money is created?
It's a good question. Honestly, like I remember being a kid playing in like the woods in my family's backyard. And a bunch of our friends like would come over, and like we would try to build like forts and like, I don't know, cool things like, not weapons, but like little stick slingshot type things. And for whatever reason, like I always thought it would be cool to like have like an economy where like someone builds slingshots, someone builds forts, someone does whatever. And we needed money for our economy. And I remember like going like far away towards like the lake near our house and finding like a unique bush that was scarce compared to from, where we were playing and out in the woods, and would bring that back and be like, hey guys, like this is our money. And like, I kind of picked it because it was scarce and only I knew where it was. And then we kind of just used that as our money to like build things and stuff. So like, that was kind of like one of the ways where like I kind of started to maybe question money or intuitively grasp like, oh, something needs to be scarce. Oh, like if I get this bush and it decays over time, like it kind of needs to be durable too. And it kind of, we need enough of this, so it needs to be divisible, like things like that. It needs to be fungible. They all need to look the same, because if they don't look the same, then it's not really a good form of money. And so like I kind of, as a kid, even started to understand, like maybe obviously at the time I wouldn't have been able to tell you the monetary properties, but looking back, I'm like, oh yeah, I found something with good monetary properties and brought it back into my little society that we had created in our backyard.
Which kind of shows that I think people have an intuition of what good money is, and fiat money is just distorting our intuitive feeling of what money actually should be. Really interesting story. I love that. Thank you so much, Joe, for being on the podcast. Before I let you go, where can people find you and ask you questions?
Yeah, you can find me on Twitter or YouTube. If you type in at Twitter, I'm at III Capital. On YouTube, I'm Joe Burnett Bitcoin. You can probably type that in. And if you want to learn more about Similar Scientific, you can go to ir.similarscientific.com. We have a cool Bitcoin dashboard, very similar to Saylor's MicroStrategy dashboard, where you can see like how much Bitcoin we have, what our BTC yield has been, so on and so forth. A lot of really cool metrics. So definitely check that out as well.
Awesome. Thank you so much for being on and for taking the time. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.